right, Viking investors. So I'm very excited because I have a good buddy of mine, Omar Khan, on this webinar, and we're going to be talking about asset management, which is one of the most overlooked, undervalued components of a syndication. You can have a great deal go bad if you have bad asset management, and you can have an okay deal potentially saved if you have a great asset manager. And Omar is interesting because he came from a CFA CPA background. He has almost 4 billion in transaction histories with M&A transactions and capital financing. So he has an astute financial approach when he looks at underwritings and when he looks at the operations numbers. And he's been a good friend of mine for several years. I remember first hearing about him on a Michael Blanc podcast, maybe in 2018. Um, so, uh, that was really the first time I was blown away by somebody. But Omar, I'm so glad that you can join us. I'm hoping that Omar just moved to the Dallas area, so get in contact with him if you're in the Dallas area and you want to pick his brain. He might be able to make some time if his kid isn't at practice. But
Kids,
kid,
kids. I
I
want to
know.
emphasize the plural. You don't have them, so you don't understand how much of a pain I'm going through right now.
Oh my God. I remember one time we had a phone call set up and we just started and I heard a scream in the background and one of the kids your son busted
Yeah.
his chin up. He's 5 years old at the time. So, but Omar, you have a real intimate understanding and familiarity with asset management. You know how to make millions for your investors because of this. And I've seen your spreadsheets. It's unlike anything else I've seen in the industry, truthfully. And I think it's because you make it from scratch. A lot of people use
Yes.
these structured software programs that it's a blanket paint stroke and it's not specific to the property. And I've seen some of your spreadsheets that are very specific to the business strategy of that property, and it makes a big difference. So, do you have anything that you want to share before we hop into this PowerPoint that you?
No, I mean, look, I'm very grateful and excited. Colm, thank you for inviting me. Thank you to the Viking team.
Yeah,
I'm excited to be here because I feel like, look, it's always been important, obviously, right? But especially in the current times, now you're going to see what is that saying? The weed separating from the chaff, right? Because now a lot of people have bought deals that frankly didn't make sense to begin with, but you could kind of skate by in an easy money environment. And now as rates are going up, refinances are next to impossible. And in certain markets, the hard ones like Phoenix and Tampa's and Austin's, rents growth is not just declining, it's negative right now in certain cases. So a lot of guys, even some bigger names, are in really big trouble. And a lot of investors don't really look. This is an oft underappreciated aspect of doing the business, right? Because most investors, they don't know how the sausage is made. So they see the pretty presentation, somebody's got a big list, blah, 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 blah. And they say, oh, or whatever, it's a $50 million deal. Great. Wow, this guy must be doing really well. And oftentimes, by the way, it's not just real estate, but across all investment verticals. And there are very good operators, and depending on each vertical, that might have a smaller, say, AUM, or might be the same level as somebody else, but they're making 2, 3, 4x the money. And you often think to yourself, well, this person's kind of at the same level, or maybe they're a little below or a little higher. How are they making 2, 3, 4x the same amount of money from a similar batch of assets, but it's with them now, right? So how are these outliers? What are they doing? How are they doing it? And a lot of times it boils down to operations and management, internal management, having strict goals, and then diligently following it, because each thing in isolation isn't really terribly hard. So if once you explain to people, they're like, oh, it doesn't sound really that hard. And they're true, because it's easy in theory and hard in practice. Because it's not just say, hey, you do this one task and whatever, it's hard or not hard. It's doing 100 of these tasks every single day for years on end without taking breaks, without being like, oh, I don't really feel like it. Because the day you start thinking like that, you don't have the right systems, people, processes in place, things start falling by the wayside. So this is why the top performers, even with the same, say, level or size of assets, they end up making exponentially more money. And this is why investors kind of need to know how the sausage is. I mean, they have to have an understanding of how the sausage is made, how operations are done, and more importantly, why are certain things done at certain times. Again, You don't need to have, I don't want to overcomplicate this. We're going to get into a bunch of stuff. You don't need to have the same level of, say, knowledge as, say, for instance, I do, or say the Viking team does. But what you do need to understand as investors is why certain things are happening. So when you give your money to reputable sponsors like Viking, like Boardwalk Wealth, which is my company, like what happens from the instance you give somebody money to now they're operating, and how will they eventually dispose of their asset, your asset, right? Because you are a partner in these deals. So this is why it's very important for you to understand why things happen, and then ask pertinent questions when you feel it's an appropriate time.
Man, you got actually one of the things that I didn't prep was I didn't think about what questions do you recommend investors ask to do a background check on that sponsor to make sure that they're asking the right to make sure that that sponsor is covering the right there's no huge red flags on their asset management team, but maybe we can cover some of that as things
Yeah,
pop
I
up.
mean, we can go into this, and I think a lot of
Yeah,
these things will organically come up, right? As you
yeah,
go through what's happening, at least what our internal take is. How do we look at things? And again, there's many ways to what is it? There's many ways to what is that thing to slice? Or what is that? What is that saying?
skin a
There's
cat.
skin a cat. Yeah, yeah, yeah. I don't want to say slice a cat. That sounds very
Yeah,
weird. Well, skin a cat also sounds very weird.
yeah,
But
it's a
there's
little
many,
dated.
yeah. Wow, they both sound
I've
awful.
never skinned a cat in my life. I
Yeah,
typically
no, that's
like it
really
empty.
sounds awful when you say it and you think about saying it, right? So there's many ways to skin a cat, but you have to understand the fundamentals always stay the same. And by the way, this is the same across any field, in any line, any profession in the world. There are core fundamentals. If you don't have those fundamentals, just as a building block of your learning, as a building block of your company, it doesn't matter what industry you're in. You could be a physician, you could be a scientist, you could be an economist, you could be a social worker, you could be in real estate, you could be in software development, whatever that field is, right? There are certain fundamentals. And if you don't follow those fundamentals, you can maybe cut corners for a little while, but it's not usually a very happy ending.
And this is a time when the ugly is starting to poke its head, especially people that are over leveraged on a too aggressive debt structure from 2021. Maybe they had some floating rate without a rate cap, and somehow their provider let them get away with that. And we're starting to see some opportunities pop up, maybe Q3, Q4 this year. I'm gonna be hoping to have a lot of liquidity that I'm gonna want to deploy. But let's hop into these slides. We have about
Yeah, let's go through it. Yeah.
10 to 15 slides. Omar put this together. Which asset is this, Omar?
This is, I think, Equinox at night. You were there, right, when we
Yeah,
did this deal, Equinox at
yeah,
night,
this was a
right?
while ago.
Yeah. So
Yeah,
we've refinanced this asset, just to give you an idea. It's been 3 years and about less than 1 month, so 3 years and a couple of days since we acquired this. We've already refinanced this asset twice,
that's fantastic. Well,
right? And I think investors have about 85 to 90% of their money back while they're still equity holders in the deal. So to give you an idea, if you just kind of, even if we sold it for face value right now, right? Investors have already made 90% of the close to 90% of their money in about 3 years' time. And that's like a 30% a year return, right? And again, we haven't sold it because, again, our business model, you have to realize from the word go, a lot of this industry is based on the business model of get in, quick flip. So the IRR number looks really well, but you need a lot of money on the table, right? Because at the end of the day, you don't eat with percentages, you eat with dollars, right? So our business model from day one has been, look, yeah, we got to play that IRR game, but we're really concerned about maximizing our total gain, right? What is the total amount of dollars we can maximize? So this is why we love refinancing. We love holding on to good assets for longer periods of time. Because look, when you've got a good asset, you've got a great team, it's in a fantastic market, you know everything about it. Why would you just sell the goose that lays the golden eggs?
yeah, and to clarify, kind of, or to build on what Omar's saying, is typically sponsors are constant compensated with at the exit. So the majority,
Exactly.
and so they're incentivized to sell earlier. But he's saying, hey, if you got a great asset management team and the property is being well taken care of, high cash flow, it's actually can be in the best interest of the investor to hold the property a little bit longer.
Yeah.
And this is a perfect case.
And
So
again, it's on a case by case basis. I just want to say it's on a case by case basis. Again, somebody gives you a stupid price, you're never going to get it in your wildest dreams. Go sell it. I mean, don't be stupid. But 9 times out of 10, it pays to hold on to assets. It pays
yeah,
to just get a good asset, get everything going. And then this is the hardest part, by the way. sit on your ass and not do something stupid.
Yeah, exactly.
Okay. That's the hardest part.
I was actually talking to a sponsor in the tri-state area, and I said, "Hey, how do you decide whether or not you are going to sell early?" And his answer was, "If we can accelerate our returns by more than 3 years in a
Yeah.
growth market, then we will sell. If we can do that in more than 2 years in a slower market, we'll sell. But if it's under that, we're going to continue to cash flow." But
Yeah.
that's the example of how they made their decisions. But asset management, really, Omar, the first thing is how would you define asset management and what's really the value of it?
Look, so think about it this way, right? And I have a little spiel here. So let me tell you basically what happens is property management, there's a big difference between property and asset management. And to the outside, sometimes it's not very clear. I think sponsors haven't done a good job of explaining this because, frankly, most people don't know what this is exactly at the ground level. So, property management is your day to day. When you go to, say, an apartment complex and you go there, you want to rent an apartment, you go inside to the leasing office, you meet a property manager or leasing agent, say, okay, great, Mr. Colm, you want to get a two-bedroom as an example. Let me show you what we have. Take you to the property, tell you why the property is the most amazing property in the world, tell you what the rate is, show you what what the apartment looks like, and then hopefully you go sign a lease, right? That's the day-to-day tactical stuff of property management. The asset management is one step above that. So think of the asset manager as a CEO of, say, a lot of properties, right? Because the asset manager, hopefully there's an entire team around this, right? The asset management team is going to build a business plan. And they're going to build a business plan which says, look, here's our capex plan. Because of our capex plan, here's where we think our rents are going to be. Here's how we're going to say manage delinquencies. Here's how we're going to manage vacancies. Here is a fee structure we're adding on. If expenses are really, fat, here's how we're going to trim them. Here's how we see the next 1 to 2 years going. And by the way, it's not just only positive. If these things don't happen, then how do we course correct? Where do we go and back? So to give you an example, like anything done at a very high level, you have to specialize. So this presentation is about specializing in asset management, right? And now Viking, as an example, for instance, has mastered motivating and educating investors and getting them together to take action on the properties Viking buys, right? Likewise, for me, I could have offered coaching or courses or I guess just raised equity, but instead I focus on my superpower, which is property management companies, managing them in each of the target markets that we're in, and then understand operations at a level way above anyone else in the industry. Because I've seen this, my family's a business family. I mean, we're going on fourth generation. We've held a lot of our assets. And the one thing that's always saved us is that we have understood our operations really nicely. And as a result, there are inevitable ups and downs, but we've survived the downs, which not a lot of people can say, right? So for the next little while, I'm going to peel back the curtain. Colm and I are going to talk and we show you, look, how do we operate our properties? What is our philosophy? And how do we do this, by the way? Like I said, easy in theory, hard in practice, right? So how do we do this daily, weekly, monthly, for years on end? And one last thing before I get into this, look, this is a personal pet peeve of mine. Everybody in their industry, everybody and their grandma in this industry has basically the same ebook. They kind of have the same catchline. Hey, don't worry about toilets, termites, or tenants. I hate that word, right? I'll get to that, right? So, and let me tell you, this is the perfect example in my estimation of a shallow statement from very low level thinkers who have no concept on executing at a world-class level. So, real quick, if you just take away one thing from this entire presentation, today, I just want you to banish, literally banish the word tenant from your vocabulary. Just banish this word, okay? Because from here on, when Colm and I are talking, when we're going through this, we're going to be talking about our residents, building a community of happy residents who pay us rent, come rain or shine, 20 to 20% yearly raises in rents, and during a worldwide pandemic, by the way. And this is a true story. You can ask Colm about this because we did deals together during the pandemic where we never stopped paying distributions, even when other people stopped. So if you kind of want a little subtitle for this presentation, it's not really asset management, it's resident satisfaction. So focus on the word resident. And that's the take we're going to go with.
It's funny. I remember you had a plan that you implemented on, there was oh man, it's like pizza Fridays and these community building things, especially during the pandemic, where you're giving out lunches for a lot of the tenants and stuff like that for the kids to really try to get these kids to become friends on the playgrounds. And then once the friends are there, the I can't say tenant, the what am I supposed to say?
Resident.
The residents, they're tethered to the property because all their children are friends and stuff. So
And by the way, they're not in a bad way, in a good way. Why
yeah,
would anyone want to leave a good situation? If you're
yep,
in a neighborhood, you're in a community where your kids are happy,
yep,
you feel safe, you get good value for your money. Why would anyone want to leave? I mean, why would you want to leave your neighborhood if you were getting everything you ever wanted?
exactly. Well, so at a high level, property management's dealing with the day in, day out, and the asset management's dealing with the 30,000 foot view. Do you think we can cover some of the things you might cover on a Monday morning meeting as an asset
Yeah,
manager?
yeah, we'll go through this. No problem, man. I'll show you everything. It's not a big
Right.
deal.
And I'm going to go to the next slide. Oh,
I mean,
oh,
again, I'm going to skip through some of the stuff, high level, right? We're going to
yeah,
go through it, right? But again, there's lots of layers to this onion, right? So I want to show you the concept and theory because, look, at the end of the day, you still have to do it by yourself. It's like riding a bicycle, right? You can read all the books you want, you can watch all the videos you want, but if you don't get on the damn bike and you don't start pedaling and you don't fall down a couple of times, it's just not really going to happen.
yeah, exactly. And so, speaking of not falling down, you've been the main guy for, or not the guy, but main sponsor for about 12 to 15 properties. You've raised for other properties that you've reviewed the underwritings and really believed in the business strategy. But here's Omar's background. If you want, you could pause it and read about it. You can reach out to him. Again, he's in the Dallas area. So you can, if you're in the Dallas area, connect with him.
Yep. Look, if you go on to the next slide, this just gives you a transaction summary of the past few years, right? As you can see, multiple states, various types of projects. Some are heavy lift, some are medium lift, value add. Some of them are developments. The point is that when you understand the fundamentals, you have a core framework on which you build on and operate, things start falling into place. It's not like you have to suddenly change your strategy. I mean, math doesn't suddenly change if you go towards development versus the value adding, right? The math still stays the same. The variables sometimes can change, but once you understand the core fundamentals, you are then able to apply them across the board and paint a on a very wide canvas, basically.
Kind of side note, speaking on the fundamentals, if anybody's familiar with the Milken Institute report, they call out a couple cities as cities that are going to be big winners in this next decade. And two of them are in South Dakota, actually, where these two opportunities are. So I really like the fact that you talk about data and then you follow that statement by investing in areas that are supported by the data with these two developments in South Dakota. And if you guys want the Milken Institute report, reach out to us and I can share that with you. But these two projects in particular, I really like that you did those, Omar.
No, thank you so much. So look, if you go to the next slide, this is high level. Obviously, you can read the text on the slide. I'm not going to read it out because that's really boring. I just want you to understand that I understand you're going to want hard data as a listener. You know, most of the people are white collar professionals. It's always spreadsheets and metrics and all of this. But the truth is, look, if I only show you spreadsheets, you're going to fall asleep, no matter how much you say you want it. So what I'll be doing, and what Colm and I will be doing, is we'll show you the spreadsheet so you satiate that desire and hunger. But we're going to share specific stories from our properties, so to sort of summarize these key concepts, because it's it's one thing to understand like a metric, how to calculate a metric. It's one thing, it's a completely different thing to understand, well, how does this apply to real life? What are the real world implications of this? Because a lot of times I feel people get so stuck, and a lot of finance guys have this issue, no surprise, that they get so stuck on their spreadsheets, they start thinking that the spreadsheet is an accurate reflection of reality and not just a guiding principle, right? Hey, here's kind of what a couple of our options are. And it's always funny. I think I've joked about this that people sometimes show their IRR to the second or third decimal point. And I'm like, bro, like, do you have a crystal ball? Like, how
Yeah,
do you know, like the third decimal point, what's going to happen? Right. So just keep this in mind. You'll get the nitty gritty, but you'll also get the high level.
that,
Right.
that's funny. Actually, there was a deal we were looking at where somebody was really stubborn about making sure that it was X million and $750, and we came back and it's like, if it's not going to work at X million, it's not
Yeah.
gonna work at X.
750 isn't going to,
So,
the
but
last 750 doesn't kill you. It's the first 3 million.
yeah, exactly. But right now we're trying really desperately to find really good labor I don't know if you want to talk about if you have any dashboards that are helping facilitate finding better quality labor or more labor.
Look, I don't have dashboards. This is where our team comes in. I
Mhm.
can share some of the stuff with you.
Yeah, go
Look,
ahead.
at a high level, I can tell you this. There is a labor shortage, but look, you've got to realize property management in and of itself is a very thankless job
Mhm.
because it's a bit like being a goalie, right? In hockey or soccer or football, whatever, right? Uh, Nobody tells you, but if you save everything, nobody says, hey, good game, awesome, right? But the one time you let something fly by, but you make a little mistake, everybody's up your ass. So the easiest solution I found to this is it's a two-pronged approach. Okay. Number one is you have to treat people with respect. And a lot of people say, hey, we treat our employees really nice. We treat them with respect. But it's not really reflected in the fact that people leave, right? And
Mhm.
people have issues. So you genuinely have to treat people with respect. Just because somebody makes like 1/4 or 1/10 the money you do, a lot of times people really get this issue about, hey, I'm an owner, he's a worker, he's an employee. Yeah, those days are gone. That stuff like that doesn't really work anymore, right? Number two, you have to pay people. Okay, think about it this way, guys. I mean, most of the people on this list, I'm assuming, in some shape or form, are accredited investors. Is that a fair assessment to make,
Yeah,
Colm? Right?
100%.
But if you're a accredited investor, if you're single, you're probably making 200 grand. If you're married, God help you, because I'm also married, you're making 300 minimum, right, to be accredited. And you realize that 2 or 300 grand still is not enough money for you to think, all right, I made it, right? I made it in America. I'm crushing it. I mean, it's a lot of money, don't get me wrong, but it's not like you can just coast and start doing stupid things. So if you're paying somebody $45,000 a year, they live in the same cities that you and I do, right? How do you expect that person to make their ends meet when you yourself are barely scratching by living in the same city? And yeah, I get it. You live in a nicer place. They don't, but food kind of costs the same to them, right? So paying people the appropriate market wage and treating them respect. I mean, this goes hand in hand, right? Because you
Mhm.
can't have one without the other. It goes a long, long way towards solving this problem. And then paying people on time. And a lot of people, the vast majority of people in this industry, because I can talk about this, right? They don't do these things. If they pay people, then they want to cut some corners. If the guy's a maintenance tech, suddenly they want them to be a leasing supervisor. And this, because, hey, we're just paying you money, right? You got to do everything. Yeah, people don't really buy that stuff anymore, right? So you got to treat people with respect. You got to show them a path, right? Hey, here's a path. You stay with us, this is what we can do for you. And then actually follow through on your words, but pay people a living salary. And again, trust me, it's coming out of my pocket. It pains me to say this thing because every dollar we give out is a dollar we don't give back to our investors.
Mhm.
But it's that old saying, right? A stitch in time saves nine. That's true because you can either solve a small problem right now, or you can let a big problem fester and then it's just unsolvable, basically.
Mhm. Well,
So no direct answer, which no, I
yeah,
don't have a magic wand to tell you this, but you'd be surprised at how good of a quality of labor you get if you pay people the right appropriate salary.
yeah, and this keeping on and building that relationship. Speaking of that, do you have your asset managers go to the site a particular
Yeah, dude. Like we're there at least at the bare minimum once a quarter at the minimum. Apart from that, I mean, I go there or my asset managers go there. We make unannounced visits. But
yeah, yeah,
more importantly, look, with my property managers, I know pretty much all of them. Like I have them on my phone.
yeah,
Okay.
yeah.
I have their numbers, their cell phone numbers, right? I text them anytime if they have a kid or once somebody had a family member that died. I personally pick up the phone and I call them. Somebody's family member died. I couldn't be there in Atlanta, there because it just didn't work. I made it a point to send her flowers, told her to take an extra 1 or 2 days off. We have a leasing agent. We've just paid her a little bit more and gave her that time and breath to kind of breathe and take care of the stuff, right? Again, none of this is like groundbreaking stuff that I'm telling you here. You
Mhm.
understand? This isn't like I don't have a 16-page manual on how to like tell you on how to, treat people with like decency. But
Yeah.
again, the bar is so low, guys,
Mhm.
that if you just show up and don't do stupid things, nobody's talking about doing intelligent things.
Mhm.
Don't do stupid things. Take care of your people. Take care of your vendors. Take care of your property managers. If they have a birthday, have the decency to wish them happy birthday. I mean, how freaking hard is that?
Mhm.
Right? Put it on a calendar. Tell your operations manager to put it on a calendar. When you're on a call, everybody starts the call and be like, hey, I'd like to say, hey, Amanda, are you going to call? Yeah. Happy birthday, Amanda. And everybody kind of, you understand? Now, for a lot of guys, it'll be like, oh, that kind of sounds cheesy. No, it doesn't sound cheesy. It sounds like being a normal human being and not a miserable person.
Yeah.
They are working with you. They are not your, they're not working for you. Do you understand? I mean, there has to be some level of difference, but it's not like it's that whole traditional employer employee thing. Look, there's a certain element of that you have to maintain, but look, man, if you pay, it all boils down to, look, if you pay peanuts, you get monkeys. Okay, we don't want monkeys,
Yeah.
so make of that what you will.
Absolutely. Um, Digging into these bullet points, the third
Yeah.
one I see, it says making sense of complex renovation programs to make sure that the budgets are adhered to. One of the
Yes.
things I think about is, let's say you have a renovation that drives tenant satisfaction, but doesn't drive actual numbers or
Yeah.
fun, or like a pool, for
Yes.
example. How do you value that compared to a renovation that might drive additional income, such as maybe parking over like a covered parking or adding a storage unit? How would you go, well, this one's more important to add a pool because it will make it more attractive to move there? Or, how do you compare
Look, number
something?
one, there is no like hard way to compare, like, say, feelings with data, number one. But
That's
you have to ask yourself the question, if I, again, you have to stay within budget, right? I'm not saying, hey,
yeah,
go
yeah.
and fix Taj Mahal, right? But look, you have to ask yourself the question, what will happen if I don't do it? So for instance,
Mm.
you could put parking ports on and be like, yeah, people pay me $20. Well, shit, if your occupancy goes down by 20 points, how, how much is that $20 really helping you? Right? Like, you understand? You can
Yeah,
look at things like, okay, what is the retention ratio that you have? How many people sign leases and how many new leases you have? And what is the average length of stay? All of that stuff. But the biggest question you have to ask yourself is, what happens if I don't do this?
yeah,
Right? And when a lot of times, again, this is not a panacea, but a lot of times, if you simply ask yourself the question, what happens if we don't do this? You will, and again, this varies from property to property, right? You will automatically start going down that chain of what happens potentially if you're in a community, the community focused, a family focused community in the suburbs, right? If you don't have a pool, you don't have amenities, families might come, they will leave. There is a big cost to just turnover. It's not just turnover. If the unit, you have to maybe repair the unit again, and it might take a month, month and a half. So now, not only have you spent the money to repair and turn over the unit, you also don't have the rent for that 1 month, right? So you got to combine both things together, right? So you got to keep these things in mind. Again, there is no like one metric that solves all these problems. And this is why having having a very detailed, nuanced understanding of your asset management, what are the variables of your property that are the key levers of your property, having that, which differs, by the way, on a case by case basis, is very important. This is not just paid by the numbers. So
well, I'm bummed you don't have a magic wand, Omar.
you'll have to buy my coaching program for that goal.
So, well, is there anything I mean, that's a great point, just really understanding the property and thinking about what's the long-term uh, consequence if I don't do this thing.
Yeah.
And so,
Look, it's a bit like anything else in our life, right? If you don't eat right and you don't exercise, and I am the wrong person to be saying this, by the way, because I don't eat right and I don't exercise a lot, then you can't sort of be surprised when 5 years down the line you're unhealthy and out of shape, right? It's kind of
yeah.
that simple thing.
Well, I'll be your fitness accountability buddy, Omar. So,
Dude, unless you like literally find a way to work out on my behalf and somehow I get the benefit of that, yeah, sure.
well, let's hop into this
Yeah.
next slide here. But that was some really keen insight.
Look, this, I'm not going to labor the point here too long. Look, of course, we can't cover, like I said, every single thing about asset management and our process in one presentation. You can pause the screen here. This just gives you an overall asset management framework to our investors. Some of these stuffs, like, we'll cover today, but some stuff like being aggressive about paying the least amount of property taxes, contesting your property taxes, reducing expenses. I mean, this is common sense stuff. You likely understand this at first glance. I'm just showing you this for the sake of completeness. So just so you understand what a framework looks like.
One of the things that I heard about you in particular was your ability to address the expense management. For
Yeah.
example, when you acquire a property, looking at the existing vendor relationships and seeing if they're actually adding the value that you're paying for. Um, there was a property that I had some friends of mine invest with you, and you chopped it down in the areas that it could have been chopped, and then there are some areas where you added um, cost to, for the management perspective. But I mean, and just the negotiation, having an asset manager that can identify what's the going market rate, and if you're getting ripped off or not, that's a key thing.
Yes. Look, that's one thing, but I think the other thing also is that a lot of folks, number one, directly go to expenses and they don't go to revenues. Look, expenses, you can, yeah, I know people say, oh, yeah, you cut expenses to the bone, and that's great, but you can only cut expenses by so much, right? I mean, you still need to spend a bare minimum amount, even if you're a slumlord, right? You need to spend a bare minimum amount. You're just not going to escape that, right? But where the real magic happens is when you really start honing in on revenue. How can you push up revenue?
Mhm.
Because theoretically, I mean, there is an upside, but theoretically, there is no upside, right? So when you focus on pushing revenue and you have that maniacal focus and then you prioritize expenses, again, this is with the caveat, you don't let expenses explode, right? There's a balance there. But if you really focus on revenue, you get that going and going as quickly as possible. And then you come to the expenses, then you need to have the mentality of saying, because, look, a lot of times what happens with expenses is people say, I will cut with no understanding of what the implications are down the line, right? Give you an example. We should cut payroll, right? Great. Do you want to hire stupid people to manage your property? Because that's going to have a way bigger effect across the board, right? So a lot of times people are like, no, the going rate is 60, we'll pay her 55. I need to balance my budget right now, right? Well, you're going to get an idiot. And there's going to
Yeah.
have big ramifications for your property for a very small amount of money.
Yeah.
Conversely, what also happens a lot of times I've seen is that there's expenses on the books and the management company just keeps, hey, we've always had that expense.
Mhm.
You got to be like, well, that's great, but it's not really your money. It's my money. And you got to have a very good reason why that expense exists. And just because you've been doing it for before, even if you had the property, doesn't mean we got to do it going forward. Right. So it's focusing both on not just cutting expenses because for the sake of cutting expenses, but then also looking at each expense individually and figuring out, well, do we need, you literally have to ask yourself the question, why do I have this expense? And then somebody responds, could be good or bad. And then you have to ask the question again, why do we need it? So you have to have this why question asked 3, 4, 5 times till you get to the root. And a lot of times when you get to the root, you realize, wow, that was stupid. We don't really need this thing. Or, hey, it's really intelligent and it's better we have this thing now than to spend a boatload of money else later on. I don't know why they're all number one. I guess they can all be
Because
number
they're
one.
all the
It should
most
be 1, 2, 3, 4, 5 in no order. In no order. But
that's
I kind of like this. I kind of like this actually. They're all number one. Top 5 rules, they're all number one.
they should be
Right?
everybody's number one rule.
All the rules are number one, right? We're gonna approach some drier topics. We're gonna talk about this stuff. I just like you to keep these 5 set of rules in your mind. We've crystallized these over years, and it helps to keep everybody in the same going in the same direction and agreeing on the top priorities. Number one, your reputation is the most important thing, either in the market, with your employees, with your partners, with your investors. So stellar reputation and strong relationships are very important. And I'm going to get into this because it's a whole framework, right? On-site teamwork makes the dream work. Like I told you, if you're property managers, you have to pay them good money, ideally a little bit above market, so they're never tempted to look elsewhere, but you got to treat them nicely. You got to treat them like human beings. Oftentimes you forget that. People say, oh yeah, that's obvious. And then they go do the exact opposite of that. Right. So your on-site teamworks make the dream work. Remember this 55, 60, $70,000 property manager you have is probably managing a 30, 40, $50 million property. Yeah, you really don't want to screw up there, right? You got to know your rent roll inside out. Now, what does a rent roll mean? Rent roll basically says, hey, by each unit, say by each unit, what's the unit type, who's renting there, how much are they renting, what's the market rent, what are the fees we're charging, when did the lease start, when they release it. You need to know this thing inside out. I can share a screen with you. You can share a dashboard. It's a live dashboard of an existing property I have, but you have to know this like the back of your hand. And if you don't know this, by God, you're going to get into a lot of trouble. Text, you have to manage your capex like your hair is on fire. Literally, this is not figuratively. Literally, you have to manage your capex like your hair is on fire. And typically, Everything's a priority, but you've got to start from the outside in. The reason why you start from the exteriors and move to the interiors is because we're human beings. Anybody who comes and drives to our property, they're going to already be starting to form an opinion about the property, even if they don't realize it just with the walk in, right? So when you enhance the outside, the potential resident is primed for your stellar property before they even meet your stellar property manager. Then they meet your really good property manager. That's a really good interaction. That's 2 for 2, right? Then they go towards your apartment to rent. Even if the apartment is 90% of the way there, I don't recommend it, but even if it's 90% of the way there, they are more inclined to rent your apartment over other apartments, even if it's a higher rent, because all the other items subconsciously check out, right? And you can only do this when you have strategic and your literal haters on fire and you're going bam, bam, bam. This is where asset management really comes into play because you've already made a business plan. And lastly, delinquencies are evil. They are the work of the devil. Okay. We are not infidels. We do not want delinquencies. This is why we have a stellar reputation and strong relationships, not just with our partners and investors, but with our team and our resident. And the reason why we have a strong reputation, strong relationship with them is because our reputation says that when there is a problem, either we solve that problem before it's happened, or God forbid it's happened and we didn't know about it, we will solve it right there and then. There is no work order that's out there for 2 weeks and we haven't gotten back to the residents and now they're in limbo and other kids are crying and nobody picks up the phone or everybody kind of gives them the go around. That's why your stellar reputation, strong relationships with your stellar management, because you know what the market rent is, you know what your value proposition is, you're providing them good quality amenities. That's why you cannot have delinquencies. You have to manage them. And this is why delinquencies are the work of the devil.
Said from the man himself. Well, this is quite a list. I'm the first thing I think about is you have these strict standards. How do you work with the property manager as the asset manager without seeming too micromanaging?
It's my money. So
Okay.
I'll do whatever I want, but I treat them nicely, right? I mean, look,
Yeah.
I have great relationships with my property managers, but at the end of the day, it's our money.
I know. I see. I know you do.
Yeah.
I know you do.
So I don't look again, there is a balance. I mean, you kind of have to know what you're talking about. If you start making outlandish demands, if
Yeah.
you say the rent should be $10,000 a month, and the property manager is like, bro, this is a 70s vintage asset in South Atlanta. You're lucky if you get $1,200, right? Yeah, okay, then you're acting like a moron, right?
Yeah.
But you're not micromanaging when your leasing activity is down, when you're spending money. So it's not like you're cutting costs, you're renovating, but your capex budget is way out of proportion, right?
Yeah.
I mean, as examples, right? Then you're not micromanaging, and it's my money. I'll do what I want because my ass is on the line. I take care of my investors. I make sure I take care of my property managers. I take care of the property management staff. I don't cut corners. And if I don't cut corners and I provide value, I expect the staff to do the work on time and I expect to get paid by my residents. And of course, there are some people that are doing the devil's work and are delinquent. Well, we have to file evictions on them, not because I want to, but because I have done everything from my end to provide you values. I am leading with value, right? I'm not saying, hey, I'm going to jack up the rent for no reason. I'm not giving you any more amenities. The quality of service isn't improving. The building quality and amenities aren't improving. The pool doesn't work. Nobody picks up the trash. No, 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 no. All of those things are going to be taken care of.
Mhm.
But running a not-for-profit organization, this is a purely for-profit affair. This is why I always chuckle when people ask, what's your big why? And I have to look at them and go like, to make money. Why else would I be doing this? Right? This is a for-profit exercise. So you have to treat it like a business, but you have to lead with value.
Mhm. Yeah. Definitely puts the ball back in the residence court.
Yeah, but again, but just realize, please, you can't blame the property manager if you set stupid, like unachievable goals. You understand? I mean, you're going to burn out the property manager. You have to be reasonable, right? I mean, if you're asking for them to get you're asking to get, say, class A plus 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 rents on a C property just because you had shitty underwriting and now you're in a pickle. That's not the property manager's fault. You got to accept responsibility for that, right?
Oh,
So you have to be reasonable, because if you're not reasonable, people are just going to stop working with you. Or if they work with you, they'll just cash a check. They're not really doing anything.
Yeah, absolutely. Building on that, what are some of the things that you have your asset managers review on a Monday morning meeting? I don't know if you want to go over if you have a
Yeah,
minute.
you want me to share my screen? Let's go.
Yeah, yeah. Let's hop into it. So
Okay, hold on.
I'm
How
gonna
do I
stop
share?
sharing.
So
Yeah,
this is like a little dashboard, right? I created this. I think multiple people must have seen this. Right. Again, I'm gonna go high level, right? We're not
yeah,
gonna
for
for a
sure.
point, and then we can talk about it in
For
detail.
those of you watching, I've seen Omar's spreadsheets, and it's it's like a quilt of just data across multiple
But again,
screens.
it's designed in a way that my managers have been trained. We have training videos. So this is just a report. It's not like the data import stage. This is just a report. I know some of this looks ugly. It's just because we want to get the work done in this most efficient possible way.
Mhm.
And I know people who are in finance. A lot of times I explain it to my private equity friends. They're like, "Well, this is not properly doing this and that." I'm like, yes, you have to cater to the lowest common denominator. We need to get the work done. And I want my managers to understand what's going on, not for them to tell me, oh my God, you are really great at financial modeling. Because I really don't give a shit about that. I just want the work done on time. And I want my managers to get the information they want because they have to be empowered to make decisions, right? High level wise, tell you what the rents are, what the units are,
Well,
some of
just
the,
building on that too, if something goes wrong,
you also have to fix it, right? Yeah.
exactly. It's
Yeah.
your
Yeah. Go ahead. Go
yeah, I
ahead.
mean, it's almost fiduciary responsibility. The investors don't want to hear excuses. They want to hear, okay, if something does go wrong, what's the plan of action to course correct?
Yeah,
And
exactly.
this provides the visibility on, and I don't know if this is exactly what you do on your Monday morning
Oh,
meetings.
there's a bunch of things, right? So I'll
Yeah.
show you. There's like so there's high level wide. You see your rent, you see your number of units, leasing activity. There's various categories of how much what was happening last week, what's happening this week, what's a total lease, right? You can kind of see that. And this kind of tells you basically our leads, appointments, any reasons for leaving, reasons for rejection of somebody's application, reasons for somebody giving us a notice to vacate, what is our lease expiry schedule. I'll go into a lot of details. This is very important, actually, right? A bit of a financial snapshot. This is before the month end close, right? Move in, move out schedule, how many units are ready, blah, 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 blah. This is done every week, right? So once we go here, this is
Wait, go
across.
go back real quick. Do you have the LASAL also?
Yeah, I'll show
Yeah,
you.
there
I'll
we
show
go.
you.
Yeah,
There's
there it is
another
right there.
report. There's another report with that, which I'll
Yeah.
show you in detail, right? So this is over, say, gosh, whatever, since like 2019. I just see this.
LASAL is how a property manager would track the influx
Yeah.
of potential tenants.
Yeah, look, the guys, the point is top of funnel, bottom of the funnel, right?
Yeah.
And what happens throughout that funnel? You can call it whatever you want. Everybody's got a cute little name because they want to sell a course or a webinar. The fact of the matter is, what happens when people hear you? And it's like in marketing terms, what is the customer journey from them learning about you to then actually signing on the dotted line? That's it. You can call it whatever cute term you want to call it, right? Uh, Again, Google star reviews are very important. And all you're really trying to do is incrementalize. A few of these we haven't had, but you see, because our manager is out right now, but see, we've got 5-star 12 reviews, right? Slowly pushing stuff, right? High level, where's your occupancy? What is your lease? Opinions, shows, net delinquency number. You see, typically it's high at the start of the month and it just creeps down, right? Because, if they're doing it on the first day of the month, you're going to have quote unquote high delinquency. It's not really delinquency. You have to like the third or the fifth. How many units available left to leave? This is called the loss to lease tracker. I just built it up because I just need more granular information. Again, gonna go high level, right? You've got
Yeah.
your rent roll, right? You're a manager. You just lay it out in a tabular format, right? This is very good. The reason why you want to lay it out in a clean tabular format is because now you can write formulas on it. Why do you want to write formulas? Because I'm going to show you why you're going to write formulas, right? So you see your unit type, your status, your market rent, your in-place rent or IPR, your loss to lease, right? Which is the difference between market and in-place rent. This property I acquired in February of last year. It's about a year ago, right? Man, we took rents from, hold on, so let's see. I'm going to go all the way over here, right? Let me go all the way. Da, 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 da. We took rents from, and we're going to look at average from $720. This is average. Don't worry about the market. Last guys were stupid, right? You go from average of 720 a month to, hold on, 993 a month. So if you go 993 divided by 720, we've actually raised the average rents by about close to 40%. Forget about the market because we still have a massive loss to lease over here. You
Yeah.
understand? So the reason why it's very important is you can see this again, you see this massive rents over here. The reason is the last guys didn't do anything. even within 1 year, we pushed up revenue by 40% and we still have a long way to go. Right? So you always have to pick these unfair fights. You see, okay, what are the fee income that I'm adding on? Various water, trash, CAM, month to month, pest, rent, whatever, total amenity fee. So you see this, right? Somebody pays you, say in this case, 1,050, but they're also paying us $73 on top as various types of fees. So it's not just rent, it's the fees also, right? They become a nice chunk of change, right? When does your lease begin? When does your lease end? The reason these are formulas, again, don't worry about the actual content, worry about like what's going on, is because I want to track what is the term of the people that live there. Now, what
Yeah.
was happening, what we realized, I mean, again, there is a balance between having long-term residents and having like people leave in 3 months, right? Because oftentimes we see on properties is that properties that have really good long-term, it's good, but typically it's because rents haven't been raised in forever. So if
Yeah.
rents haven't been raised in forever, no shit, people want to live there, right? So there is this balance. Whereas I'm going to go all the way to the end. Whereas we want their term to be more, we don't want it to be like 20 years,
Yeah.
right? Because this means we're kind of not doing our job. Let's
Yep.
just be honest, right? So there is no happy middle ground. You got to go by property, right? I wish I had a little like one number to give you. It's
Some of those
very
people have
if
been there for over 10 years, according.
yeah, they have, right? And if they keep paying us rent, they can stay there for the next little while, but that's not always typically the case. Now, the reason, again, why I said, hey, why do you have to lay out your data like this, right? The reason why you got to lay out your data like this is so then you don't have to become an Excel guru. You can just write basic formulas to just get what you want.
Yeah.
Because the purpose of this report isn't to become an Excel guru. The purpose of this report is your managers, your asset manager, by the way, and your property managers, because we empower our property managers, right? We train them. We're like, look, even if you leave me, I want you to go to the next property and be able to do the asset manager's job better than they can. Because when you become a really valuable tool, you are in effect also increasing the lifetime earnings that you will make. Because now you can go somewhere. I hope you don't leave me. I'm going to do my best for you to not leave me. But if you go somewhere, there is a path for you. And when you show people the path, and this applies to people who are also motivated to do something, right? Because if somebody isn't motivated, I don't really care,
Mhm.
right? But I have to lead with value and tell them, look, you are going to be taught things that other owners are not going to teach you. So hopefully you never leave. But if you sell the asset, we don't have a place for you. You are going to be so equipped when you go to the job market that people will be falling over themselves to give you a job, right? So again, the reason for drawing this up simply is our managers just get a quick snapshot, right? Hey, where's our occupancy at? As an example, right? By unit type, where is the various fees? The reason why you see a percentage over here is because I want to track what is the penetration of various fees.
Mhm.
Right? Think about it this way. Trash, we implemented, right? Uh, It takes a while, right? Look, if I implement a fee today, the only way people are going to pay me is upon lease renewals or new leases. So I want to start tracking what is the penetration of certain fees, right? In this case, for instance, it's pretty good. Best slowly because we introduced it slowly as we sign on more leases, this number is going to go up,
Mhm.
right? Ideally, what you just want, I mean, if you think about it, this is, I don't know why it's 2 decimal points, right? It should really just match your occupancy, basically.
Yeah.
Most of it, right? Because this means everybody that's occupied is paying the fees. But in the case of pest, 83.4% are paying, not because we don't want other people to pay, it's just because as we layered on this fee, and people then started signing their leases, now it's happening. There's a little bit of a lag, right? That trend obviously is less because not everybody has pets, so you gotta have some context. Renters insurance, we implemented it. It takes a little while for it to be implemented. Context is very important. Now, if we go here as an example, it should be 2023. Here, right here you go. Right, I can leave a note for my team as well. Right, so I'm going to just assume this is 2022 for the time being. You see, okay, what were our rents in 2022? What were the rents in 2021? See this? We're really pushing over here,
A
right?
big
So you kind
jump.
of see what their averages are. Most importantly, this is what I really use this is, and I want to understand what is my loss to lease opportunity because there's a big loss to lease I have over here on this property. Loss to lease basically means let's assume your market rent is $1,500, but you're only charging people $1,000. So there's a difference in between, right? What you could charge versus where the lease is. That's $500. It's technically that's kind of an opportunity, right? Hey, if you close that gap, that $500 comes to you as a manager, right? And you're just going to market, right? So I want to understand, but again, all of that's not going to happen in 1 month, right? Because as leases roll off, you have to slowly bring people up, right? You have to You have to have a come to Jesus moment, but you have to have it slowly. You can't just have it all in one go, right?
Mhm.
So I want to understand based on the month of where this is done, right? It says 1/11/2023, it's 1/13 today, right? So 1/11 for the next X amount of months, what is my total opportunity to burn off my loss to lease? Like every month, okay, this month I need to burn off 1570. This month is 2000. This is potential loss to lease because think about it this way. If you're in a market, you've got a really good resident, you sometimes, if their increase is, say, I'll give you an example. If their increase is $500, but they're like, bruh, no, I can only pay you 450 more. Well, sometimes you have to take, it's a game time decision, right? You've got to take, do I take the bird in hand or do I let somebody else go? Because you don't want to spend 2 months trying to find an extra $50. It's just not worth it, right? So
Mhm.
this is potential opportunity for us to basically acquire more dollars that go directly, by the way, to our bottom line, right? So this tells you basically what is the average loss to lease by unit type.
Can you see real quick if what's the typical turnover cost? Is that one of the tabs that you have on
Yeah,
this
I
property?
have I have it over here.
Yeah,
My
I know you got like
manager sent
20,
me.
25 different spreadsheets per property. This is literally just a little. This is the first layer of the onion, by the way, um,
Yeah.
on the asset
Look, I
management.
have it. My manager has it. I don't have it off the
Yeah,
top of my head.
it's
Every
probably
time I
what
just take him when we have.
$2,000 maybe for
It's
turnover.
it's something like 12 to $1,800 depending on the
Okay,
property,
yeah,
but that's just the turnover cost. It's not okay, hold on. It's a slightly more than that because we also include what is the lost time in rent.
okay,
You understand? Like, hey, it's not just hey how much money I spent. It's like however many days this thing was not on the market. Well, I'm not getting that money. So
yeah.
that's a cost. I don't really, I mean, you understand there's implicit and explicit costs. I care about the total cost. Just because I don't see something doesn't mean it doesn't exist.
Yeah, so you might look at that and then go back to the previous example that you had.
Yeah.
It's like, I don't wanna this person won't take a $50 bump, but if they don't, we're gonna lose $2,500 and that's gonna take over 2 years to get back, you
Yeah.
know?
I'm actually, that's a good question. I'm going to give me one second. I'm going to try to look for it because I don't want to ping
Yeah.
him right now in a minimum
Well, I
couple of
got a
minutes.
question in the meantime while you look
Yeah.
for
Go
it.
ahead.
So this is fantastic, it's very specific to the property. How does an investor identify a stellar asset management team? They can't just say, "Hey, show me your Google spreadsheets or show me the software." Is
I
are there
mean, I guess you can say that the bigger point over here is to understand why these things exist and for the investor to ask questions around, okay, well, how does your team manage this on a day to day basis? See,
Yeah.
Miles just came in. You see this? I left him a note.
Oh, cool.
See, he came in, right? You see this, right? That's
Yeah,
why. So when you leave a note, we can just do this on the fly. While you and I are talking, this is happening. This is a live thing, right?
yeah,
So the point is, guys, the point is for you to understand why this is happening. And then say when you're talking to somebody, you can ask, hey, how do you manage and track your loss to lease? Or how do you manage and track your revenues? How do you manage and track your CapEx? And if somebody, and again, none of these questions are that hard. As you've seen, the answers aren't like,
mhm,
you don't have to go to college to understand this, right? Uh,
yeah,
what you're really trying to think and understand is how is somebody thinking about this problem? In fact, are they even thinking about this problem? Right? Because first of all, if they're not even thinking about elementary basic problems, it doesn't really matter what's going on, what question you ask, right?
yeah,
Because again, somebody doesn't have the fundamentals, it doesn't matter. So you need to ask questions, not, hey, how do you write this formula? And then again, do a pissing contest or who can write a better formula. The point is to understand how is the management team thinking about this? What are some of the levers they're thinking about pulling? And where do you think this may or may not go? And by the way, are you getting a satisfactory answer? And to be very clear with you, on each of the assets you get, anybody who acquires this, there's only like, say, a couple of key pivot points, right? I mean, there's many things to do, but as the asset management team, you have the property managers focusing on 100 things. You have to focus on a couple of points like capex, maybe, or delinquency management, or burning off the loss to lease. So you have to always pick like one or two major points as the asset manager. Hey, okay, anytime the conversations go somewhere else, we got to course correct, bring it back here.
mhm,
Because there's always 2 or 3 points that account for like 80 to 90% of
which
your entire opportunity
which
set.
goes to this last bullet point, which is focus
Yeah.
on the maximum levers.
Exactly, right? It just focus on one is ideal, but to be honest, it never really happens, right?
Yeah.
It's ideal if one happens or if you can hone down, but max three levers because when everything is a priority, nothing is a priority.
So what are your favorite things that you like to see on the dashboard? I mean, you only showed us a couple of them. You might
Yeah, I
have
mean, there's ones for capex, there's ones for different thing. Again, I we have another couple of dashboards, and the problem is there is no, as much as I would like to tell you, there is a one unified dashboard that does every single thing on the planet.
Yeah.
There is nothing, man, because sometimes you are looking at operational metrics. Sometimes you are looking purely at financial metrics, right? If you're doing our accounting overview at the end of the month, we're looking at accounting related aspects or financial related aspects because we already have the operational know how from talking about it every week.
Yeah.
Right? We know, okay, leases are trending this way, occupancy is here, bad debt is here. So by the time we get the financial report, we know what the building blocks are. We know why things have happened. Now, you might have questions around the particular accounting treatment of something, right?
Yeah.
But it's not like, oh my God, our occupancy is X% and I never knew about it.
Yeah. Well, I really like the granularity that you show on the detail. And a perfect example is you had the date that you received a certain amount of Google reviews. And I know that when you acquire a property, and I don't know how many other syndicators do this, but if you acquire a property and the Google review is 3 out of 5 rating or less, you're going to rebrand it. And that gives you a brand new start on the reviews. It gives you obviously a new name. Most people do the new name, but so then I go
Like,
back and I go, what
just on
capital?
that point, so let me show you this.
Yeah,
This is Equinox at night. When we acquired this, it was like 3.2 or something, man. I don't know what it was. It was something abysmal, right? And you were the Google photos were like you thought you went into a dungeon or something, man. Even though the property is really nice, actually. I mean,
yeah,
you would think you were going into a dungeon. Uh, but and again, you can't. And also, just to be very clear, guys, a lot of people think you can hack the system, right? I'll just
yeah,
create fake accounts and I'll give myself a review and blah blah blah. Yeah, that shit doesn't really work,
yeah.
right? But you'll get banned.
I do like
Google,
that.
there's a, yeah, there is a reason why Google is close to $1 trillion company. This is incremental over a period of time. You start
Yeah,
doing the week in and week out thing, not a I'll do everything in one week and kind of check out.
yeah. Check out the crossings at McDonough. That's our current project, and you'll see the reviews on there at McDonough. There you go, right there. So, oh,
See, this is
not as
ample
a,
opportunity.
we're gonna
No,
take it over though. We're gonna bump it
no,
up.
no, but hold on. Look, this
Look
is
at the
also an
pictures.
opportunity. This is also an opportunity for you, right?
Yes.
Because you can all because you have to realize doing a good job, the job you were supposed to do anyways, by the way,
Yeah.
right? And then asking for a review and then putting all those pieces in place where people give you a review. It's not that hard when you're doing a good job to begin with,
Yeah.
right? Maybe the only difference between this, you guys, and the previous people is they just didn't ask for a review and did everything as an example, as an outlier example. Now you ask it. So now you didn't need to spend any more money to ask,
Yep.
hey, why don't you leave a review, right? It's like that famous line in American business, right? Would you like fries with that?
Yeah.
30% uptake in revenue, baby. All you had to do was ask a simple question,
Yeah.
right? So that's the opportunity as well, right? This is a big opportunity. You guys
Yeah.
take this from 3.3 to say, again, in this example, 4.5,
Yeah.
right? I mean, dude, you can screw up on a lot of things. So that's basically the point. I just wanted to bring up that Google review thing because a lot of, look, it's a mixed bag. You also have to realize a lot of times people who are pissed off leave reviews because happy people don't leave reviews because they've got stuff going on in their lives. It's kind of a mixed bag as long as you understand and know what's going on. That's all that really matters. Right? Look, we talked about this. I could have put a cute little graphic here about rent roll and circle of life stuff or something. The whole point over here is understand your rent roll, understand why. Once you understand your rent roll, you understand why capex should or should not be spent. You understand if you're providing value, why delinquency should or should not exist, and that has a direct effect on your P&L. It doesn't work the other way around. Like you don't look at your P&L and go like cut, cut, raise. No, it builds up to the P&L. These operational things build up to the P&L. And that's why the other thing also is you need to have a strict meeting schedule. We have one hour long meeting, and then we have at least 3 touch points with the managers during the week.
Do you ever
I mean,
share?
they're like 5, 10. There's like 5, 10 minute like touch points, nothing substantial.
Are you allowed to share recordings of those meetings with investors? I know that there's some,
No,
you
I
know,
don't do it. That stuff.
well, you might not be allowed to because of the corporate veils.
Oh no, I can do whatever I want to do. I just don't do that.
Yeah. Okay. I was curious. I don't know. I don't know if
No,
any investors have
I don't.
asked.
I don't really do
Yeah.
that because look, uh, I have lots of investors, and I'm happy. We provide. Look, we provide an stellar service. Our investors, frankly, have never asked for it because I guess we're just doing it, so they don't really ask for it.
Also,
But we,
part of the attractiveness of being a passive investor is the hands off. You know, I'm in a handful of
yeah,
syndications. It's like I know that I trust the people. I trust the underwritings, and I can sleep at night. Why do I want to watch that particular meeting anything I say can't legally be used. Otherwise, it
Look,
penetrates.
even if it's legally used, my point is, look, it's just they, I'm not gonna like tell every like have my entire employees be under like recording all the time because like
Yeah,
how can they ever have a frank conversation with me?
that's true. Yeah,
Right. So look, we go ahead, you're going to see high level stuff, basically, like say, what are the renovations look like? Just gives you an idea, right? What are the renovations look like? Guys, a lot of this, it doesn't cost a weird amount of money. You
mm,
just have to know what you're doing and how to strategically spend money. Because the problem is, a lot of times people over improve the property and you don't get brownie points for that. Okay. Nobody says, wow, you've got a golden toilet in your apartment. I'm going to pay you $5,000 more a month in rent. Okay. Nobody cares about that. Right.
I l-
So improve it, but improve it up to a point. Right. It's still a business at the end of the day.
I love that you said that because I think that's one of the biggest bad example asset management strategies is to over improve for the neighborhood. That's like building a 3-story house in a neighborhood that every house is only 500 square feet. It's like there's
Yeah.
probably a reason that from a financial perspective that nobody's building a bigger house. You never want to
Yeah.
have
Yeah, yeah.
so
So again, I just want to say, because I've also heard comments like from people like, oh, I want to be proud of the place we have. I was like, okay, that's kind of a weird flex, but if you live in a $2 million home and your residents are paying $1,200, well, sure. Do you want to put Calcutta marble in your apartments? Because that would be pretty dumb.
yeah,
So, just you have to keep things in context, right? Look, the rest of the stuff, if you go down the next few slides, we're wrapping up right over here.
yeah,
This is one of our developments. We're going to deliver this right at the end of Q1. This is Blue on Lorraine in Sioux Falls. This was a very attractive land parcel that we sourced based on our direct relationships. Now, the reason why this is important is because not only did we source the right land, we put on, I think, our fixed rate debt on it last year was 3.25%. So we got it for
oh
5 years.
wow,
Yeah, I mean, it's crazy, right? But what we've also done is because we're attracting a higher quality resident, somebody makes it look, our average rents are going to be like 22 to $2,800, somewhere in that range, right? So we have to add facilities and amenities that are in line with the rent we are asking and the finishes we are providing. That's why it's Scandinavian design, wellness focused, luxury community. It's built around a lake, so you can use the lake amenities like, say, you get the paddle boat and the canoe and all of that, so kayak, all that stuff. But we also have stuff like climate controlled underground parking, rooftop sauna. It becomes very important in Sioux Falls, South Dakota, right? Or a community room, outdoor kitchen, projection screens, fitness centers that are overlooking basically the lake, right? So it's very important to match your demos with what you're doing, right? Like I said, don't over improve it, but sometimes you have to spend the money to get where you want to go. And just the other income alone, it's just contributing over $250,000 in addition to the market rent increases, right? Now, if you go down to the next slide,
well,
you'll
i'm,
see
I'm
that.
just kind of curious about Sioux Falls because again this was a top city on the Milken Institute report, which
Yeah.
explains their methodology of why they chose this as one of the best small towns in the country. One of my good buddies, Keegan at Mach 1 Equity, from the Air Force, there's an Air Force base nearby. Do you, just kind of a side note, is Sioux Falls benefiting on the energy sector from the
No,
stuff
I
that's
mean,
going on
I
in
no, that's North
in
Dakota.
Russia?
That's North
That's North
Dakota.
Dakota? Okay.
South
Well,
Dakota
this
is
is
way more diversified, basically.
okay. So because this does have the military bases nearby.
Yeah, I think so. Yeah.
Yeah.
I mean,
So,
by nearby, it's a nebulous term. They're not.
yeah.
You can't just walk to them, basically.
Yeah.
Okay, let's go to the next slide. Equinox Night, we talked about this. We've twice refinanced this. Our current valuation is about 75% higher than book value, even though we've refinanced it twice. We had about a $1.5 million renovation plan. We completed it way ahead of schedule, 18 months. Occupancy was in the mid to high 90s with minimal bad debt, even during COVID. I mean, we kept paying our distribution. So you get the right assets, you do the right thing with the right team, one magic happens, right? If you go down, you'll see there's another case study about Brighton Farms. Now, this is very interesting because this was during COVID. Our current valuation has increased by 94% since we took over. We refinanced this into long term debt. We returned about 68% of investors' capital back, or slightly more than that, actually, in 19 months via a combination of distributions and return of equity. But more importantly, what we've done is that we have really upgraded the profile of this property for, by the way, not a lot of money. It's like I think it was slightly less. It says 1.4, it was slightly less than that. And we did it in 12 months. and 34% under budget, by the way, just to let you know. This is around the time when lumber prices were going crazy and everybody was thinking hyperinflation is going to happen. When you're strategic, you can do a lot of things, even during weird times, right? And lastly, Lakewood Oaks is a great example of an asset we got in. We knew we were not going to keep this for long. This is one of the assets you get, you improve, and you flip, right? It's in a good area. It's not in the best type of area that we want to be in. But we came in, we did significant but strategic deferred maintenance. We occupancy was maintained always in the high 90s, and then we sold to a strategic buyer at the highest price per unit in the submarket at the time.
That's fantastic. All examples of proper asset management.
Yeah.
Yeah,
I mean, so look, if you want to learn more, pretty simple. You can join our mailing list by going to boardwalkwealth.com. The form is right on the homepage. And if you join now, I'll also give you access to my hidden mobile app that has over 9 hours of free passive investing courses. Again, that's at boardwalkwealth.com.
that's great research. That's been up for over a year now, at least, right?
Yeah, the app is everybody loves it. We go do all of our property updates via the app. Our investors love it because they can just have it on their phone and just whenever they're going, they can see everything that's happening.
Yeah. Well, Omar, any last things that you want to say? I think you provided incredible insight that our investors don't normally get exposure to because, again, asset management, not really talked about, but it's a huge impact. As you can see in the previous examples, how he was able to separate all the information on those spreadsheets and actually create an action plan and improve the lives of the tenant
I
residents.
just like to say, Colm, in my next life, I want to come back as Colm, Colm with your guard like hair. And if I only do that, I would have known that I'm a successful person.
Oh my God. Thank you. All right. Hi,
Thank you,
Viking
everyone.
investors. Reach out to Omar if you want to learn more about how he can potentially give you a little more insight on asset management. And until next time.